E-commerce growth in South Africa has slowed from 30% in 2021 to 7% in 2025, while investor funding plummeted in 2023. Local SMEs face increasing financial pressure as rising interest rates and inflation raise business operating costs. Joining me to unpack this on Small Biz Evolution is Brent Downard, Head of Credit at Merchant Capital. Brent, thank you so much for joining us.
Thanks for having me.
Investor funding in South Africa plummeted in 2023 and has only started recovering in the current year. With this reset, what exactly are investors looking at when looking at investing at e-commerce SMEs?
Yeah, so I think any business that's looking to raise capital needs to be conscious of a number of elements in their business. First of all, financial health is a big consideration for any investor looking to deploy capital. And what that means is really that your business needs to have significant cash flows. It needs to be at least generating some kind of surplus on a periodic basis. The revenue of that business needs to be consistent. It needs to be stable. There needs to be significantly diversified revenue streams. So, relying on purely one revenue stream or one client to contribute to your revenue really puts these businesses at risk of not being able to raise capital. Investors are also going to look for the scalability of a business. How able is this business to scale in the short term with additional products or services being added to it? How good is its market reach? How good is its distribution? Does it leverage things such as e-commerce to kind of reach a more nationwide base? And so those are really things that I think any business should be focusing on when it comes to raising debt or capital.
Well, as mentioned earlier in our conversation, e-commerce South Africa has grew by 7%, which in the first half of 2025, which is down from 30% when looking at the numbers from 2021. From your own perspective, what informed this shift?
I think that really a big catalyst for e-commerce in South Africa was COVID. So, at that point in time, unless you were defined as a required product or service, you really went into a shutdown, essentially. And so a lot of businesses had to pivot into e-commerce, and there was a lot of enablement that's happened in South Africa around that. So, shortly after that, obviously 2021, there was still a lot of lag off the back of COVID. Things were still very uncertain. And I think since then, things are kind of normalizing a bit and getting back to the normal type of trading. Brick and mortar has become popular. But e-commerce really does allow a business the option of or the opportunity to scale significantly. So I think it's something that businesses should be looking into.
Brent, according to SMEs South Africa, over 72% of small businesses dipped into personal funds in 2024. Now, can we look at how these businesses can adopt financial systems that can keep them afloat or keep them out of this trap in the current year?
Yeah, so I think what's so important for any small business, or any business for that matter, is to ensure they have a disciplined savings mindset. And really what that means is they have a buffer, and they should be targeted in their approach on this. And that means that, you should aim to have a savings of around at least 3 months of your cost base in order to enable you to weather any downturns. This also really enables business to take opportunity in upturns with that buffer, and it also gives them a great competitive edge because, businesses with significant savings or buffers and their ability to grow organically means they can take advantage of things like discounts for bulk stock purchases, and that really results in them getting a competitive edge and having pricing flexibility because they can offer the same good or service maybe for a discounted price. So that organic growth and that savings mindset is so important for these SMEs.
Can we look at what does building a multi-channel business look like, specifically looking at SMEs with limited budgets?
That's a great question. So there's actually a lot of stuff available to SMEs with limited budgets that are looking to grow a multi-channel approach. And so Obviously, taking advantage of existing online platforms is a fantastic thing to do, because it means that it comes with a built-in client base already. So them selling their product or service through this online platform, it tackles the issue of having to distribute to clients. It also has a lot of logistics benefits associated with it. Other things that these SMEs can do is really to try and potentially look at opening up pop-up stores. Things like that really come at a low cost from a rental perspective, as opposed to holding brick and mortar stores. It gives them the opportunity to expand into different markets and different places as you can move those stores around. Social media is a fantastic place that businesses can leverage for free, essentially, to kind of market their products. And there's such amazing stuff happening around WhatsApp for Business at the moment. So it really does help to scale your sales and provide a channel and communication opportunity for these businesses to their clients. So those are kind of a few ways with a limited budget that a business can create a multi-channel opportunity, without having significant upfront costs or expenditure.
Brent, just to wrap up, local entrepreneurs are under pressure with the current prime lending rate at 10.75%, based on the repo rate, which is obviously 7.25%. In this costly environment, what strategies can e-commerce SMEs adopt to keep revenue flowing?
Yeah, so I think the first thing I would say is I mentioned it earlier as well, is trying your best to have a diverse revenue stream. And now what I mean by that is, first of all, you have to consider the concept of concentration risk when it comes to a business. Concentration risk relates to a business relying on one or two clients to generate 80 or 90% of their revenue. Now, that's a significant concern, because if something happens to those businesses, and like you say, market pressures are impacting businesses significantly, then they lose the ability to have as much expenditure, and that then reduces the revenue of the business that relied on them as a client. So having a diverse client base is very important, a good mix of clients with limited exposure on one particular or two particular clients. And I think another thing is to have a multi-product and service approach, because in times of economic uncertainty, people tend to value or undervalue products, given that they're financially constrained. So having multiple products that you can offer to your client base really helps to de-risk the business and makes sure that given a downturn or given some economic pressure, they are not reliant on one product or service to generate their revenue.
Brent, we'll have to leave it there. Thank you so much for those great insights.
Thank you for having me.
That was Brent Downard, Head of Credit at Merchant Capital. Until next time, goodbye.